What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So the crypto space is off to a great start in October, and for just cause. Bitcoin has officially reclaimed its 1 trillion market cap. It is now officially the best performing asset class of 2021 above all others, with a delivered 50% return according to NYDIG. The significance here is twofold. First, the obvious one, which is being acclaimed as the best performing asset, but more important than that is the formal recognition as an asset class. If you consider that the SP 500 as a whole has returned just over 17% year to date, you can see why people hold Bitcoin, and studies like this one here have concluded that temporary crypto market decline and volatility are not enough to diminish the importance of cryptocurrencies in investment portfolios. So that's pretty bullish, right? We've gotten some pretty big news on the regulatory front from Gary Gensler, chairman of the SEC, weighing in on the US approach to Bitcoin and crypto in general. Again, lots of bullish news from major banks, institutions, and governments around the world to go over today. You'll want to watch all the way through for the full picture. Also, a few people have reached out and asked me where I stand on Shiba, wondering where I stand on it given the recent 200+% move and the fact that I'm a huge Dogecoin supporter. Well, that video will drop either tomorrow, Friday, or Saturday this week. Go ahead and drop this video an early like if you haven't already, subscribe and ring the notification bell so that you're notified when the Shiba content does hit. All right, let's get into it. The sentiment around crypto has firmly shifted into positive territory. This comes in the back of Fed Chairman Jay Powell stating during his hearing with Congress last week that he had no plans to ban Bitcoin. What took us over the edge, however, is the commentary from SEC Chairman Gary Gensler during his testimony with Congress on Tuesday. His exact words were as follow. The US approach is really quite different from that of China. It's a matter of how we get the cryptocurrency field within the investor consumer protection that we have. But the most important part of his testimony is this. The US has historically regulated cryptocurrencies as securities, a category that includes most new tokens that are sold by companies as part of an ICO or initial coin offering. The SEC views these assets as posing a risk to investors. As such, the SEC has little interest in regulating long-established cryptocurrencies with no initial sales, such as Bitcoin. And that right there is major news. Now, that would also include Ethereum, Dogecoin, and possibly Cardano and a few others. This basically means that the regulatory overhang on Bitcoin has been lifted. Rumors are now that we could see a response on the Bitcoin ETF approval in the coming couple of weeks. We'll have to wait and see, but either way, the SEC owes a response in early November. In other bullish news, we know that El Salvador made history by making Bitcoin legal tender on September 7th. At that time, the price fell from $52,000 to as low as $40K. I previously went over why this had nothing to do with El Salvador, but it still didn't stop the media from trying to paint it in that light. The fact is, El Salvador bought the dip for a total of 700 Bitcoin when the price dropped down to that $40K mark. That is now worth $10.5 million more, roughly. So it's no surprise that Brazil is now pushing to pass a bill that would provide Bitcoin with enough legal protection to be accepted throughout Brazil, just like fiat currencies such as the Brazilian real or the US dollar. Government Deputy Orio Ribeiro, in a direct quote, stated, "We want to separate the wheat from the chaff, create regulations so that you can transact, know where you're buying, who you're trading with, and have this asset to buy a house, a car, or go to McDonald's and buy a hamburger. It will be a currency in the country just like it is in other countries." In addition to Brazil, Ukraine is another country now in the process of finalizing their Bitcoin/crypto bill with the goal to streamline how the government will handle these new asset class without creating unnecessary overhead for oversight. And if that wasn't positive enough for you, Bank of America, which is the second largest bank in the US, released its report on crypto as an asset class. They go on to state that digital assets as an asset class is now too large to ignore because it has evolved to encompass so much more than just Bitcoin. Essentially, they're calling out tokens that act like operating systems, decentralized applications or dApps without a middleman, stable coins pegged to fiat currencies. Remember the CBDC from Nigeria, the e-Naira that I shared with you earlier in a previous video, and non-fungible tokens or NFTs. And the reason why those are important is because NFTs, again, enable connections between creators and fans. I've been telling you for a while that the adoption of cryptocurrencies is on the rise. And in the report, they stated that they estimated 221 million users globally had traded cryptocurrencies or used blockchain applications as of June of 2021, compared to only 66 million in May of 2020. And finally, they stated that the applications built on this new software architecture appear to be growing more quickly than past technologies, right? Again, we've made reference to the internet before and how Bitcoin was growing faster. Now we're saying essentially that the whole crypto space and blockchain is being adopted much faster. Anyone in a network, according to them, can establish a process, application, or project that provides consistency and trust. I've covered many of these points on the channel before, and the bottom line is this: we're just at the beginning of this exponential growth. I've told you before again that this decade belongs to the early adopters, and those who invest in the space now will more than likely reap the benefits long term. Now, even though I'm not a financial advisor, it's reports like these that add validity to my own train of thought and reinforce that I am on the right path. This space obviously isn't without risk, but doing your due diligence will yield some ridiculous returns over the next few years. The most common argument and warning against crypto as an asset class is that it is super volatile, right? And since the initial sell-off earlier this year, I've been discussing how financial institutions had used the opportunity to accelerate integration of blockchain and crypto to better position themselves to serve their existing customers. And eventually, that the pendulum would swing back once they were closer to being ready. Well, let me play you this clip by Andrew Peel, who is the head of digital assets at Morgan Stanley. And for context, Morgan Stanley as a corporation has $1.5 trillion of asset under management and operates in 20 countries worldwide. So I would say that paying attention to what their head of digital assets has to say is probably worthwhile. This interview took place during the recent Blockware Digital Asset Summit in New York City in September. So take a listen and I'll come back on the other side.
Coming from your traditional background at Morgan Stanley, where do you see the merge, if there is one?
So it's an interesting moment at history of evolution of traditional finance. On one hand, we have these huge explosion of innovation on decentralized finance platforms, where there's use case for assets to be used for collateral, for lending and borrowing. And some of these platforms have grown significantly. 1 year ago, there was only 800 million locked on DeFi on Ethereum, for example, and currently we have over 180 billion. So the growth, I think, can't be ignored. On one hand, these platforms grow significantly, but they're also very limited in terms of the regulatory requirements. They're open source software using digital assets, which aren't necessarily clearly regulated in every jurisdiction in which they operate. Mm-hmm. But I start to see the combination of the two worlds. If you look recently, the European Investment Bank, EIB, issued a security, a bond on top of public Ethereum. So Ethereum, the asset, ETH, was used, for example, by the EIB to issue a security. So I think the power there is these public, open, permissionless networks being used for traditional securities offering, where you have the innovation of the public open source blockchain, but the structure and regulation of the security offering. I've found the conversation has evolved significantly over the years in these digital asset summits. I find this particular event very professional in terms of the participants. The industry starts to work together. You see some really innovative use of the technology, but with the right regulatory framework in place, and these types of products continue to evolve, and it's conferences like this that enable that combination of the two worlds to find a way to work with each other.
That is pretty insightful. I mean, you got to realize that there's no way that traditional finance would sit idle and let DeFi come in and take over. But on the other hand, there is no world in which DeFi continues to operate unregulated. As time goes on, DeFi and TradFi, or traditional finance, will increasingly merge and become one new financial system that is more secure and more efficient thanks to blockchain technology. For the customer, it's the integration of DeFi that will eventually allow banks to start offering things like true high-yielding savings accounts versus the current underwhelming 0.50% rates. This is precisely why you see things like French investment bank Société Générale, which is one of Europe's largest banks, working to strike a deal with the MakerDAO community to tokenize its covered bonds using the Ethereum blockchain. If this goes through, it would be the first deal of its kind between a DeFi protocol and a traditional investment firm. Now, obviously, there is so much more to cover, and I'll continue to bring you evidence of why this space is not slowing down. But for today, the last thing that I'll mention is this. The world financial system is going through a massive upgrade powered by crypto and blockchain technology. If you consider that more than half of the central bank in the world are exploring how to launch digital currencies, not to mention that more and more corporations are seeking crypto exposure to maximize their returns or increase operating efficiencies. As a result, assets like Bitcoin, Ethereum, Polygon, Solana, Polkadot, and many more are gaining major network adoption, and that will ultimately drive an increase in their value. That's the reason why I'm investing in the space. And there's no doubt in my mind that this is likely going to be one of the greatest wealth creating asset class of our time. And for me to miss out on this simply isn't an option. But on that note, I'll leave it here for today. If you made it to the end, make sure to drop the video a like and share with others so they too can be in the know. For my newcomers, hit that subscribe button and don't forget to ring the notification bell so that you don't miss out on any future content just like this. As a reminder, I post every Sunday and now on most Thursdays for crypto-focused content. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.